First of all, Euro USD daily time frame, and last week it broke this support level, and now it is ready to retest this resistance because that was the low which was made during coronavirus market crash. So this is your next key resistance level, and at this resistance level we could get short term selling opportunity. From that level it can come back to support 3488, that is based on dollar index. And if we only focus on this last wave, because that is bullish wave, and this is your last horizontal resistance level. And if we watch closely this daily time frame, then this daily candle, as we mentioned in last video, that it can make double top, and these three red candle confirm that setup, because not one but millions of traders were selling. That is why these red candle possible, and that was huge tail on daily time frame. Because if we look at H4 time frame, that was the resistance, and it saw a strong resistance on that level, but after Fed speech it changed everything. It break that resistance and it is making new high, because again on Friday market ignored that NFP number, and beginner traders are still confused what is this happening, because next year is recession, and last week Fed speech was important because his monetary policy tone has been changed. Previously they were saying they will hike more, and that was hawkish tone, but now they sound dovish, because now they are saying that more rate hike means more risk. So they are decreasing rate hike size from 75 to 50, that is ending of QT monetary policy, and that is bullish for Euro USD. So on a H4 time frame it is making higher high with higher low, and wave W after making 61% retracement as wave X, that was your 38% projection, and it tried to make double top. So after breakout next target is 61%, that is near daily resistance level. So near that level we can get a selling opportunity, because dollar is heading towards a strong support level. So once reversal start counter trend correction, then again this support level will be our first key horizontal support. And if we see H4 time frame of USD JPY, this was top, and now it is coming down making lower low lower high on H4 time frame, and it has broken two key support level, and now it is ready to retest next support, which has been tested many times, and a strong key support level 131. So this is your next target, and at that level we can get counter trend correction back up to 138, because there is a possibility it make a head and shoulder chart pattern, and that can be your neckline, or maybe a chart pattern correction between these two level. But once 131 level breaks, more and more seller will join this trend, because that was the time when Bank of Japan were selling dollar but when FOMC member gave signal, it is start sideways correction, but on each Fed speech it is coming down. So dollar trend has changed. This was your top and it is coming down. Now wait for carton trend correction, then we will sell. But focus on this next support level 131, and if it goes up then it can retest 138, then you sell again, target up to 131. And if we see GBP USD H4 time frame, then last week was possibility of ending diagonal chart pattern, but new high have end that possibility, and that 100% projection for wave C is broken, and next target will be 138 level. And on this time frame we have this trend line, and it is working as a strong dynamic resistance level. It is again testing, and if this trend line hold as a resistance, then it can come down, and that can be good selling opportunity for intraday trader. But first is that dotted line, that horizontal resistance level. To know more about that resistance level, we go to daily time frame. This was your strong horizontal support, and now price is testing as a resistance, but last week two daily candles are closed above that level. So next resistance will be 26,476, that is next resistance. Then we will target upper resistance, but it is next nearest resistance. So from now, from current price, we can expect a sideways correction or a chart pattern. Then next high will target this resistance level, or if it drops more, then we can use for retracement top to bottom, and will target 50 or 61% retracement level. Then we will buy on that level. And if we see this complete trend top to bottom, this is your new bullish trend. This was your last bullish trend when Fed did QE monetary policy. This was your double top and it came down. Then in middle of the trend, Fed was hiking interest rate. That was beginning of QT monetary policy. Because before rate hike, before QT made double top. So this is your bottom, and before next QE monetary policy start in 2024, before that there will be rate cut, and before that there will be rate pause. And these are three stages, and that are bullish for these pair and bearish for dollar. So if it drops and give a retracement level up to 50 or 61, then we will buy and will target a new high. But before next buying opportunity, we need a good correction on these pair, and focus on this trend line on H4 time frame and these resistance on daily time frame. And weekly time frame of dollar index, weekly, because main thing is happening on weekly time frame, not H1, because this was bottom and this was top, and Fed QT monetary policy is ending, so dollar has made top and now it is coming down. And if we focus only on last wave from this bottom to top, then price has made 38% retracement, but it was coming down non-stop till market close, and it ignored strong NFP number because everybody know next year 2023 will be recession. First NFP number will go below 100k, then they will be negative, and once NFP turn negative, that will be rate cut because Fed will immediately stop hiking interest rate. So after all of these things, that 50% retracement level is your next horizontal support because now everyone is watching for that support level, and that entire area from 50 101 to 61% retracement 98 is your support zone, and in this area we can get either counter trend correction or sideways correction for dollar, then a new low next year because dollar has made top and now it is coming down, and these two level are your key level, and we have to see where it made its short term support either at 50% or 61% retracement level. And if we focus on Fed monetary policy, because where dollar will go next depend on that thing. That was your QT monetary policy, and when it came down, that is was your QE monetary policy. And before QT start, before rate hike start, this pair already made bottom. So before next QE monetary policy start, you can expect price has already made top. So when this was going up, rate hike size was increasing from 25 to 50. Then in last FOMC meeting, they did 75 basis point rate hike. But now Fed is saying they will change rate hike size, and then from 50 to soon they will go to 25 basis point. So that was beginning of QT, and that is end. And from last rate hike to first rate cut, that is your next big trend for the entire financial market. You can trade anything, but everything depends on this thing. The time between these two things, the last rate hike can be 50 basis point or 25, and we will know in March. And they are saying they will hold interest rate, that is called Fed pause, and that depend on Fed. They hold interest rate for 1 month, 3 months, 6 months, or maybe 1 year. Then in the final there will be rate cut, and after rate cut there will be QE monetary policy because that is first stage, and pause is second stage, then rate cut is final stage, which we call Fed pivot. So pivot basically mean Fed cutting interest rate. So beginner traders are still confused, but we are in first stage, and that timing from last hike to first rate cut is important, and we get clarity about this thing in FOMC meeting in December, because when Fed will make clear that interest rate will go 7% or 5, because 7 means CPI, 5 means PCE number. Until March 2023, CPI can come to 6% and PCE can come to 4%. So maximum interest rate can go from 5 to 6%. Then on final stage, when Fed will start QE, dollar will drop very hard. That will be a extreme bearish trend for dollar. And before that period, it can make a sideways correction or counter trend correction. On that correction when start, and we have only these two price level. So everyone is watching how price will react this support zone, because when that happen we can get counter trend correction in gold, a selling opportunity, and in euro USD we will get counter trend correction, and that can happen after Fed FOMC meeting. So as a complete beginner intraday trader, watch carefully how price react these two level and all the pair that you are trading, because last week most important thing that changed everything, that increased possibility that this is your dollar top, that now FOMC member are talking about new inflation target. Right now in news you saw 2% inflation target, but next year they can change target from 3 to 4%, and CPI, which is now above 7%, can easily go up to 4% next year, while beginner traders are still thinking about 2%, while Fed is targeting for 4%, because next year 2023 will all about recession, and when they will see sign of deep recession, immediately they will start cutting interest rate. And last week they said they still believe in soft landing, and market don't believe in that thing. That is why it is ignoring NAP number for last 2 months.